Over the past year, I've made at least $105,000 every single month, all from crypto, and I'm only 26. And I've been able to grow portfolios to over $5 million multiple times in every market condition there is, a bull market, bear market, or going sideways. So in this video, I'm going to teach you the exact strategies that I follow, how to pick the best coins to buy, when I buy them, and when I sell them, so you can simply just copy me. Let's get into the video. So what crypto trading strategies do you need to use in order to make a lot of money in the markets? And there are several. But the first one is token investing. So what is token investing? Token investing is simply buying a coin low and selling it higher. Then this may sound extremely simple, but later on in the video, we're going to cover specific strategies on how to pick the best coins to buy and when to buy them low and then sell them high later on in the video. Also with the exact trading setup that has made me millions of dollars in the markets right at the end of the video. So buying low and selling high is very simple and easy to do, but many people overcomplicate it. Buy down here and sell up here in this region here. Very, very simple. You're buying something cheap and you're selling it more expensive. For example, if you buy an apple for 10p, but in the future you think it's going to be worth $1, you'll buy it at 10 cents and then sell it for $1. It's very, very simple, and that's making money in the markets. The positive with this is that it gives you the largest returns in the market. What I mean by this is that it is the easiest way to make the most amount of returns in the market. You also spend the least amount of times at the charts. You don't need to spend hours and hours and hours. As you can see here on this chart here, this was at the beginning, probably 2023 to 2024. Then you started to sell even in this area here, say mid to late 2025 here. So you don't need to spend a lot of time at the charts. You just do one action, you click one button at the beginning of the year and then sell at the end of the year. You also need the least amount of skill. Anyone can do this. Anyone can buy a coin low and then sell it high. However, there are negatives towards this that make it a little bit more complicated than just simply buying low and selling high. You have to wait a long time for the coins to pump, depending on the coin. So for the example I just shown you there, it takes about a year and a half. And most people get impatient in this time. So they make mistakes along the way. They sell too early and then they see it continue to rise, but then they rebuy it back a little bit higher than what they originally bought it for. Then it pumps more and then they keep making mistakes that way. That is the only negative to it. But if the coin is brand new, then you may not have to wait as long. You may only have to wait a month to 3 months. And there is a lot of volatility in the meantime. As you can see from this chart here, what do I mean by this? You may buy the token even here, then you have to eat a 50% drawdown. The price is around $40. You buy it at $40, it dumps to $20. You lose 50% of your money before you then 10x your money. So there are some positives and some negatives. Also, even if you buy it here at the exact lows, here, $16, I said to buy it, you would have doubled your money. You would have round tripped back to break even. You would have pumped up. You would have seen a certain amount here at $100 and then it would have crashed 40%. So you're going to have a lot of volatility swings in the meantime. The same again here. It pumps all the way up to $200, dumps all the way back down to $100. And it does this multiple times across the cycle. So you need to stay extremely patient. Now, that is one crypto trading strategy. What is the second crypto trading strategy? And that is crypto trading. This is where you take advantage of lower time frame volatility in the market. And as I said, I'm going to cover my favorite trading setup that works 80 to 90% of the time later on in the video. And I'm going to show you some trades of lower time frame volatility here. So this is the same Solana chart as you saw. I said buy down here, sell up here. However, there's a lot of time in the meantime. Now, what you can do in between these periods is make money by trading these smaller time frames. So as you can see on the screen here, this is a trade that I called before at $100. I told everyone to buy Solana here at $100 underneath. And then what happened is price then moved up over 100% across the span of a couple months. Now you can take trades in the smaller time frames like this on the 4-hourly. And what you do is you can simply just buy and sell on pullbacks. So as you can see here, you can buy in these zones before a pump and make smaller amounts of money in the meantime to grow your portfolio. You may not have time to wait for a year, but this 27% move here, let's say you bought here, this 27% move here took 21 days. So some of the trades take less time and you do not need to wait for years to play out, and you can take advantage of the lower time frame volatility. The positives to this is that trading is like a live performance sport. You get instant feedback on your decision making. If you make a good decision, you make money very quickly. If you make a bad decision, you can lose money very quickly. But this means you can learn from it very, very quickly. But investing is delayed feedback. You might need to wait months or years to know if your thesis was right. But you can become a better investor if you become a better trader. Now, not everyone can become a trader. It's very hard to do so. You need to spend some time. You need to develop the skills, which is actually, I'm going to cover that shortly in the negatives. But if you become a better trader, you can also become a better investor. And you do not need to wait the years to learn the cycles of being an investor if you become a better trader, because the cycles of being a trader happen a lot quicker. That's the positives to becoming a better trader. Trading also allows exponential compounding returns. Instead of having to wait for years for returns, say a year or two, you can flip accounts very quickly in the span of weeks, 2 months, but you have to be very skilled. Skilled traders can flip capital multiple times per month, and you can trade in absolutely any market condition. This is how I was able to make millions of dollars in the crypto markets, because I was able to trade the bull market. I also identified when the peak of the bull market was, where we were about to flip into a bear market, and I changed my trading strategy into a trading strategy. Or I can also trade it when the market is going sideways. You can also trade in any of these market conditions and make money. You just have to be very skilled. And as you can see, the negatives here, there is a lot of emotional pressure. You have to watch the charts a lot more closer because you're on a lot lower time frame, and there is a lot of emotional pressure to this. So due to watching the charts closely, there is also higher potential levels of risk. You can become liquidated. If you buy spot and invest into a token, you simply just buy the token. That token has to go to complete zero for you to lose all of your money. Whereas with the trading, that doesn't need to happen. If you use too much leverage, you can get wiped out a lot quicker. So there are also higher levels of risk. But with that, you need a higher skill requirement. Because the risks are higher, as I said, you can become liquidated. You need to become more skilled. If you are more skilled, then the likelihood and chances of you becoming liquidated become very slim. However, also the negatives to this is it is time intensive, and trading can feel like a full-time job sometimes if you're really in the zone. What I like to do is I like to have moments and periods of my life where I am trading a lot, and then I go on a longer holiday, let's say for 1 to 3 months. And the reason being is because trading is like a live performance sport. You need to keep your mind fresh. You don't want to burn yourself out too much. You need to stay sharp. You need to stay active. And for example, if you're an athlete, you overtrain, you may not perform as well because you are training too much. And it's the same with trading here. So trading can feel like a full-time job sometimes, which is fine because you're getting paid absolutely shitloads, but it's the same thing. So there are those 2 crypto trading strategies that I like to use, or you need to use, and you need to switch between them depending on the market condition and what the market is giving you. So this comes to when to buy and sell the coin in order to make a lot of money. So when do you buy and sell the coins in order to make a lot of money? And this all depends on the market cap of the coin, because high market cap coins and low market cap coins, you need to trade them very, very differently because you use different strategies. For higher market cap coins, you trade them. For lower market cap coins, you buy them low and then sell them high. That's one of the main differences as per point number 1. And as I said here, with high market cap coins, for example, sometimes you can use 100 million, but for the best trading experience, you want to go between 500 and a billion plus. Usually the higher the better, obviously. Bitcoin is one of the highest ones. Coins like Bitcoin, Ethereum, and Solana. These coins are the best to trade because they have the liquidity and they are less volatile. What do I mean by liquidity? The liquidity means that there is enough buyers and sellers in the market for you to execute and enter the market at one certain price. Because obviously for you to buy a coin, somebody needs to sell that coin to you. If there is nobody to buy or sell that coin to you, then the market will go up or down to find a buyer or seller so you can buy it. That is in a less liquid market. If we go to coingecko.com, you can see all of the high cap coins at the top 100 anyway. So as you can see here, Bitcoin, Ethereum, obviously you don't want to trade USDT, XRP, BNB. These are all some of the big coins here in the top 100 that you can trade. The lower you go down, the less liquid they get. So you can still trade coins like Pepe, but it's obviously getting less and less liquid as you go down Trump. So it mainly coins that are coins only, not like wrapped tokens or anything like that. And Jup you can trade. I've taken many trades on Jup before. And so these higher cap coins, you can invest in them, you can buy them low and sell them high. But this only works at the beginning of the cycles, and you have to time the market. So for example, on Solana or Bitcoin, I can show you both examples. For Solana here, you need to buy in this area here. You need to time the market. You need to time the market. You had any moment of time in this 502 days here to buy it, and then obviously you have time to sell it up here. Same with Bitcoin. You have to time the market as well. This is my old trade here, buy and walk away. That was here in this $80,000 buy and walk away. Anyway, what I'm saying here is that you had time to buy Bitcoin in this region here, maybe even in this region, but you have time in there, and you have to time the market, because if you start buying here, you have less likelihood of buying low and selling high, because you're already buying price high on the higher time frame, which we'll cover shortly as well. And so then we move on to smaller market cap coins. So for example, like 10 million to 300 million. These are coins like meme coins, some DeFi, and pretty much many altcoins here. And you can find them on crypto market cap. So any coin that isn't Bitcoin or Ethereum or Solana is really an altcoin, but you can see them on the categories section here. As you can see, there is DeFi. So if you go to number 14, DeFi here, and then you have meme, and this is at 20 here. So you have DeFi, decentralized finance at 14, and then you have meme coins at 20. So there'll be some altcoins in here that will give you bigger returns than on Bitcoin, Ethereum, and Solana, because they're a lot smaller. They need to grow from 10 million to 300 million market cap, which is a 30x on your money. You put in $1,000, you'll have $30,000 if you buy at 10 million and sell at 300 million. These coins, though, are not so good to trade. You do not want to trade these coins because they do not have the liquidity, as I mentioned earlier, meaning that if you enter a position, there is not enough buyers and sellers for you to get the best price. If you buy it and there isn't enough sellers, you may have to buy it at a higher price in order to find a seller. But that does mean, though, that you can invest in these coins and you can simply buy them low and sell them higher. You do not need to wait for the beginning of a cycle, because you usually find new coins while the cycle is playing out that is created mid-bull run, which means that you get all of that upside. And because they're new, they don't have all of the previous trading history, which means there is less people to sell. If a coin is brand new, there is less sellers, and then that means that the coin can pump higher. And that's why you want to invest in these lower market cap coins, because they give you the return on your investment. And Bitcoin is unlikely to give you a 30x anytime soon. It's going to take years and years and years to play out. However, the difference between these two is that if you have a few million to billions of dollars, you can put $1 billion in Bitcoin and expect to double it and make $1 billion. Whereas if you have a smaller market cap coin, you can't put $1 billion into one of these coins. You have to use a smaller amount of money. For example, you can put in $1,000, $2,000, and if it 30x's, you put in $1,000 to $2,000 and come out with $30,000. And this is how you can grow your portfolio over time in order to make larger returns. So you can start off just trading the smaller market cap coins, but as your portfolio gets bigger, you can move into the higher market cap coins. But if you're a very good trader, you can still trade these higher market cap coins depending on your skill level. So what are the other ways of when to buy and sell the coin in order to make a lot of money? And we can time altcoins on finding layer ones that are pumping. So what are layer ones? A layer one in crypto is a base blockchain network. It's like Bitcoin, Ethereum, or Solana, because each of these coins have their own blockchains. That means that other apps and other tokens are built on top of their chains. For example, on Solana, you have all of the meme coins built on Solana. For Ethereum, you have all of the DeFi, decentralized finance, built on top of Ethereum. So why are these layer ones important? Because all of the altcoins are built on top of the layer ones. So once a layer one pumps, you have a small alt season on that specific blockchain. So let's say Solana pumps. All of that money from Solana filters down into all of the altcoins built on Solana, because people want similar returns like Solana. They miss Solana, but then they buy it high, and then they want to invest into the tokens that are built on Solana in order to replicate the same success, as this is where most of the volume is at. And what do I mean by volume? There is a lot more buyers and sellers in that market, making it more liquid for more higher net worth investors attracted to buy in this area, which means that all of these altcoins built on the layer ones tend to pump a lot harder. And you can see some of the layer ones when we go back to coingecko.com, and as you can see, layer one is the second highest category here. And as you can see, Bitcoin is a layer one, Ethereum, BNB, Tron, ADA, Hype. We mainly want to focus on these top ones here because this is where most of the 24-hour volume is. As you can see, I've just sorted them by volume. Number 1, Bitcoin. Number 2, Ethereum. Number 3, Solana. Then we go down on BNB. The most of the volume is on the top 3 here. But the market cap of Solana is less than BNB, but the volume is 2x the volume on BNB, which means there's more buyers and sellers. So once we've identified that layer 1 that has pumped the most, which is what we have seen in meme coin season, this current cycle, Solana has pumped a lot more than Ethereum. As you can come here, you can see Solana went from $9 all the way up to here, which is a 30x, whereas ETH USD has only gone from 900 to 4,700, which is a 4x return on your money. So Solana has outperformed Ethereum by nearly 10x, not 10x, but nearly 10x. So that's why we've had a meme coin season, because the returns on Solana has been more than Ethereum this cycle. And so what is the best crypto narrative on that layer 1? Think about this. When ETH pumped in 2021, that's when we had the DeFi season. As I just explained, when SolPoint pumped, we had the meme coin season. So what is the next narrative? Well, every single previous alt narrative season has come from one thing, a big idea. Now, DeFi season was the big idea that decentralized finance was going to take over the banking industry forever. The meme coin season was the big idea that big venture capitalists come in, buy the utility coins, they buy it all up, and then they dump on retail. Those were the two big ideas previously. And for the next crypto narrative, we need a layer 1 that's pumping, and then we need one big idea. Now, what that big idea is, I'm not sure yet, but when it happens, it will be very, very clear, and I will share it to people in my Telegram in the description below and in my private network first, which is also in the description below. So that is when to buy and sell the coins in order to make a lot of money. You need to identify which coin you're buying, whether it's a high market cap coin or a low market cap coin, and then you need to identify which layer 1 is pumping, which one has its own blockchain, then what is the best crypto narrative on that layer 1. So we come to the final point, when to buy and sell the coins in order to make a lot of money. We've already covered which coins to buy and which strategies to use. And at the end of these 3, I'm going to cover the number 1 crypto trading setup in order for you to make a lot of money on the right coin, on the right network, and now at the right time with the right strategy. So first of all, as I said, how do we buy low and sell high? And we do this because when interest is at its lowest, this is when there is the most opportunity. Now, for example, on the charts, after price has dumped on Ethereum after a bear market 80%, this is when the interest is at all-time low. So as you can see here, this chart, I'm going to cover the interest levels. Interest, peak interest, no interest, okay? It's the same here. This is peak interest. This is when there is no interest. This is when there is peak interest. This is when there is no interest. This is when there is peak interest. Obviously, it's not as exact as this, but you can identify it on the chart very simply. Peak interest, no interest, peak interest, no interest, which means that if we change the color here, but here, there is minimum opportunity for longs. If you want to buy the coin low and sell it high, there is minimum opportunity. As price comes down and interest declines, this is when there is peak opportunity. Then as price goes up, there is minimum opportunity. And as price goes down, there is maximum opportunity, and vice versa. As you can see, there's peak interest, minimum opportunity before we've had this crash below. And I actually called this crash on Twitter, on X. As you can see, I called this on X here in October. Here, I called it up here, 18th, that ETH is probably going to go back to 3,200 on a long enough time frame, and this area should provide a bounce. And as you can see, we've come back down to 3,200 here, and now we are bouncing from the level that I called on Twitter literally a few weeks ago before everyone was panicking. So now we are bouncing from these levels exactly as I predicted. So yeah, as you can see here, as price goes down and there is less interest, there is maximum opportunity. That is how to time the market in order to buy it low and sell it high on an investing time frame. Then you need to time the market, as I said, the same on investing. It's very, very similar to the interest levels and opportunity levels. Now you also get accumulation areas and then distribution areas. It's a little bit more complicated. However, it's very, very similar. When price is oversold, this is where you get an accumulation area. Then you get a markup in price. That means price goes up. Then you move to a distribution area where price is overbought, and early accumulators are now distributing, aka selling their token before a mark down in price, which goes down to a dump, and you go from a accumulation to a markup, aka bull market, to a distribution area where his price is overbought, and then you go down into a bear market. And these cycles repeat over and over and over. And let me clear the chart up, and I'll go to a new one this time. I'll show you a new example on Bitcoin. So as you can see, from this to this is your markup, this is your distribution, you go back into accumulation, you then go back up, overbought, and then the market repeats itself. Very, very similar. The market will accumulate down here. This is your accumulation before the markup, and then you get your distribution before then the mark down. Exactly the same graph. Down, accumulation area, oversold before the markup, then we go into overbought, then you get the markdown. And these cycles happen over again. Accumulation, markup, distribution, markdown. And then this repeats itself. As the markdown comes along, you then go back into reaccumulation, you accumulate in here, then price goes back higher again. And these cycles happen time and time again. And this is how you can buy low and sell high on an investing time frame, just by simply waiting for interest to die off, no interest in the markets, and oversold. No interest and oversold, that's usually an accumulation area. And then when price pumps, after price pumps, you have peak interest. Everyone's talking about crypto, and overbought. Prices are inflated. That's usually where you have a distribution area, and then price dumps after. So how do we use all of this to make the number one crypto trading strategy in order to make a lot of money? Now, it's very simple. This is a strategy I called $1 billion in liquidations and buy. You don't have to think. It's literally very systematical. And over the last few weeks, it's made me over $154,000 in a 7-day period. Now, step number one, you need to identify a key support level. So for my most recent trade, I did this on Bitcoin. It wasn't even a big move, okay? I identified a support level. As you can see here, we have support, and we have support there. And as you can see on Ethereum, this is your support level. You have resistance to support here, then we have this dump. So I've identified my support level on Bitcoin and Ethereum, okay? So this is my support level on Bitcoin and Ethereum. You just need to identify the most recent support level. Step number two, you then need to wait for at least a 30+% drop into that key support level. Now on Bitcoin, it's not 30%, but on Ethereum, it's very, very close. As you can see here, see from this peak down to here. This is a 30% drop into the key support level. There's my support level. Obviously, we overshot a little bit, but it's a 30% drop. So step number one, identify the most recent support level. Step number two, it should be around at least 30%. If the market cap of the coin is a lot lower, then it's going to be a lot larger. Sometimes it's 50, 60, 70, 80% dips. But the principle is that it needs to be around at least 30%. Then once step one and step two have happened, wait for at least $3 billion in liquidations. Now, in the past, this number used to just be 1 billion. Now I'm increasing it to 3 billion because the markets have a lot more money in it now. As the market caps grow of the coins, then there is a lot more liquidations because there is a lot more money in the markets. So you wait for $3 billion in liquidations. Plus, the most recent one was 20. As you can see, this is the Bitcoin trade here. I said this is it. And I also said it on total market cap here. So as the examples that I'm explaining on Bitcoin and total, it was on here. Yeah, there. I was waiting for a pullback into these highs here. So boom, in there. This was where we had the pullback. And this is on total here. So this is the entire crypto market cap combined. And on this was a 25% drop. This has Bitcoin in it, so that's why the number is less than 30% on this one in particular. But as you can see, this one I've called back in July. And then this one was in September before the crash. And, you know, how do you wait for $3 billion in liquidations? Where do you get that information? You go on www.coinglass.com and you can see all of the liquidations here, as you can see. And in the past 24 hours, we've actually just had 2 billion so far. So as you can see, 24 hours wrecked. That means positions closed that are longs or long and shorts combined. But at the moment, it's 2 billion. So we're coming very close to a bouncing period, which is exactly what I'm explaining in real time. On Ethereum, we've pulled back at least 30% into a key support level, which is where combined with my tweet, 3,200, then we get nearly $3 billion in liquidations. Some of these signs are setting up at least for a bounce. I'm not saying we're going to go to new all-time highs, but at least for a bounce in order to make a lot of money. which is how I make over $105,000 a month at 26 years old. And these are the exact setups that I post inside my 7-figure inner circle. So if you would like to hit 7 figures this bull run, following the exact same trades and buying the exact same tokens that I'm going to be buying, then you need to join my 7-figure mastermind inner circle. Because here are some of the results we've had. As you can see here, Jigsaw, he's bought a brand new Patek Philippe. He made a joke about a Seconda, but he bought a brand new Patek Philippe. Kaizen here, he joined over a year ago, and his goal was to take the 1 to 100K trading challenge that I do inside and turn $1,000 into $100,000. And he completed this in 3 to 4 months. And he continued to stay in the group, and he was able to achieve over 7 figures by being inside. As you can see, he's got his 6-figure balance there. And also, Obama on a bike here. He took my trades and he took my setups and he bought a brand new Rolex. I've been able to print many 6-figure earners and many multi-millionaires inside. So if you would like to join the 7-figure inner circle, then you need to head to the description below and click on the link and apply to join with me if you want to make 7 figures this cycle. So that's all for this video. I'll see you all in the next one.